Equity shares, preference shares are having above equity shares or ordinary shares. Preference shares are having some cost. Okay, these are hybrid financial instruments. It is a preferential share is something mixed up with a debt instrument. It has both the characteristics of a debt instrument and a share. So in debt instrument, what you get a regular payout or interest income. Similarly, in preference shares, the dividend rate of dividend is fixed and it can be convertible partly or fully into equity shares in a future date, or it can be convertible into debentures or bonds in a future date. The features of preference share based on maturity, it has a maturity, but the ordinary shares have no maturity period. Claim on income, if company makes a profit, you have to pay the dividend. Sometimes even if they don't make a profit, the dividend payout must be there. Claim on assets, when the company is liquidated, the general shareholders or the ordinary shareholders get the money at last, but before them or the penultimate beneficiaries are the preference shareholders. It has some kind of control, but not at all. It is hybrid form of security. Okay, so various types of bonds, convertible and non-convertible bonds, redeemable or irredeemable, preferential shares, participating and non-participating, cumulative and non-cumulative. So convertible shares are the process or right whereby one can convert the ordinary equity shares at a some agreed terms and conditions. Non-convertible shares which can never be converted into preferential shares. Redeemable preferential share has a maturity date on which the company will repay the capital amount to the preference shareholder and discontinue the dividend payment. Irredeemable, there cannot be no redemption by the company. Participating preferential shares has an additional benefit of participating in profits of the company apart from the fixed dividend. Non-participating has no such feature. Cumulative shares are the dividends that are accumulated and therefore paid before anything paid to equity shareholders. Cumulative shareholder means if in a year the company incurs a loss and dividend payment is not made, so next year when it makes profit, the last year's dividend and this year's dividend will be paid, and it will be paid before the equity shareholders are paid the dividend. Who decides the dividend payment? For general or ordinary shareholders, in an annual general meeting, it is decided whether to pay annual dividend or not to pay. Sometimes if there is a quarterly profit, you can pay interim dividend. And remember, ordinary shareholders can only be paid a dividend. Dividend means a part of the profit. Okay, a portion of the profit is paid to the customers out of shareholders. That is called dividend. Mostly the government stocks, big stocks like Reliance, etc., government stocks like IOC, BEL, GAIL, etc., they pay dividend, means a part of the profit. Okay, so that is paid, right? Recently Wipro has paid for every equity share, they paid ₹1 as a dividend. So when you buy a share, not only you make profit out of the appreciation of share price, but also in term of dividend payment, you also get the profit. Dividend payment means when the company makes profit, you are the owner of the company, na? You are one of the owners of the company. So the profit should be divided between the owners. So similarly, the dividend payment is made to the owners. Is it clear? Is it clear up to this point of time? Am I confusing you? Am I confusing you? Are the terms confusing to you? Clear, very good. Suraj Makana, okay. Yes, getting confused a little, okay. Okay, so sometimes it confuses, but these are clearly mentioned. Okay, those who are new to the capital market, sometimes it confuses, but I tried to make you understand these things in a very easy words. Okay, American depository receipts, what I said you. So depository are the companies, those who save the receipt or stock receipts of various companies. Okay, like what you deposit in a bank, you deposit money in a bank. In a depository participant, the ownership of a share is deposited. Okay, so that is depository participants. So if you want to issue any share in America, you need to get a American depository receipt. There is nothing more than that. If you want to issue your shares in European market, you need to get a GDR, that is called Global Depository Receipt. Okay, and it is also known as International Depository Receipt, IDR. Now with an IDR or GDR, you can list your stocks in a non-US stock exchange like London Stock Exchange, Euronext, France, etc. If you are a public sector banker and eligible for promotions this year, then you have landed at the right channel. In last 3 years, we have produced more than 5,000 results in bank promotions exams, starting from Reserve Bank of India to SBI, PNB to IDBI Bank, Punjab and Sindh Bank to Bank of Baroda, Indian Bank to Central Bank of India, in all public sector banks. We have a dedicated course for you, and higher the scale, greater the content is. So don't miss out this opportunity to grab your promotional aspirations this year. Visit our website, check out the links in description, or WhatsApp us at the given number to connect with us. Stay prepared and wish you success this year.